everyone, and welcome to Mortgage Introducers webinar, UK Bridging Review Less Ordinary. Suffice it to say, I think the past year and a half has indeed been quite out of the ordinary. I think everyone would agree. We've seen some seismic changes across the world, the UK, and specifically the property market. We've all, as individuals, faced some interesting challenges. Setting aside the perhaps more serious stuff, these have included moving to work remotely during lockdowns, as you can see from the living room behind me, negotiating new methods of interacting with clients and colleagues, and embracing advancement in tech, even so far as reconsidering our own relationships with our living and working spaces. This has all had some quite considerable effects on property finance, some of which have been positive and some a little harder to navigate. One of the most interesting upshots of this period, however, has been the change taking place in our high streets and our town and city centres. As the UK reassesses the role of the office, retail giants leave the market, and people across the board reconsider what they need in terms of living space. Some of these trends may have already been on the horizon and were simply sped up by the events of the pandemic, but there are others that might have taken us a little bit more by surprise. So today we are going to be discussing what these long-term trends might look like and how this will affect and indeed be supported by the short-term lending market. To give us some insight into the topic, I am joined today by Roma Finance's National Sales Manager, Steve Smith, and Head of Marketing and Comms, Charlotte Rutter. Steve has experience in retail and commercial banking, including bridging, asset, invoice, and all types of commercial finance, in addition to spending several years as a mortgage broker, building up experience on that side of the equation as well. Charlotte brings with her experience across the world of specialist finance, including bridging, development, and buy-to-let, working with various businesses, including packagers and advisors, in order to help intermediaries and investors achieve their goals. So a bit of housekeeping before we get started. We will have an opportunity at the end of the session for audience questions. So please do use the Q&A function on your Zoom screen to submit any that you think of during the discussion. We'll try and get through them all in the time that we have. For any that we're unable to cover, or indeed if you think of them after the fact and you just want to continue the discussion, you can of course get in contact with Charlotte and Steve. I'm sure they would be more than happy to hear from you. So without much further ado from myself, first things first, and to kind of kick us off with a sense of where the market is at the moment, where the UK is at the moment. Steve, if I come to you first, what do you think the future holds for British high streets and indeed town centres in general, both post-pandemic and as a general direction of travel?
Thanks for that, Jess, and thanks for the introduction. I'm happy to be here, and welcome to everybody looking on from their living rooms, kitchens, and wherever they might be. So it's very easy to be negative, isn't it? We've had COVID, we've had lockdowns, we've had Brexit, we've seen lots of shops close down, we've seen lots of retail stores, the old names that we've known and loved for years, close down and leave our shores. But actually, like everything, there's possibilities there and there are opportunities. And I think if you look at what was coming anyway before COVID, we were seeing the rise of the internet. We were seeing delivery firms. We were seeing Amazon taking over the world anyway. So people's shopping habits were changing. So there were always going to be casualties on the high street. But if you look at where we are now, some high streets are absolutely thriving with their independent stores, with their sort of leisure sectors, with cinemas and bars and restaurants, and others aren't. And I think a lot of that is down to we're in a bit of an evolution, a natural change, a natural flux, if you will. And I think people will get it. People look at the thriving centres and see that they can make our town centres work, even in this new age. And I think you will see in a lot, we're seeing stats tell us that the younger generations are flocking to the cities and towns more. They still want to live in the sort of right in the centre of things, and sort of, you know, their money is being spent on those leisure activities. We're seeing boutique and specialist independent stores grow, certainly even in lockdown, they're growing in the last year. And we're seeing a lot of sort of good stuff. We're seeing that retail itself is changing, but the stores themselves are changing. So there are the retail parks outside city centres with free parking and all of that. So that is having an effect. So we're just in a bit of a state of flux, I think. There's a changing environment naturally. And I think COVID and Brexit have just exacerbated that. And yes, of course, some issues, but they're only issues we would have found probably a year or 2 or 3 later anyway. So I think there's a lot to be cheerful about. We're seeing lots of commercial changes to the marketplace. So as we talk about semi-commercial and commercial properties, we're seeing a lot of that change into residential in the centres. There's a lot of things that are happening by canals, by rivers just outside city centres. So there's a lot of sort of good stuff that, you know, the changes are dramatic, really, if you think about what's happened over the last 20, 30 years compared to what's happened in the last 2 or 3. But I think for many things, it's positive. And for people like brokers, people in the property market, it's a really good era for us to make changes and see some profitability in those aspects of commercial going into resi, commercial going into semi-commercial, and the opportunities that they bring.
So we're not going to potentially see the death of the high street that some sort of doom were touting, certainly early on when lockdowns initially came in. You're not seeing a tumbleweed-esque kind of situation.
Not at all. Not at all. I mean, I travel up and down the country a lot, and you see some town centres that are absolutely thriving even now, and you see some town centres that are struggling a little bit now, but you can see that the town planners, the councils are trying to change things. And I think it's just, as I said, a natural evolution of things are changing the city centres, but it's certainly not the death of the town centre. It will just change. And I suppose, you know, we've changed, you know, through the decades. It's just another change, sort of probably more forced upon us with COVID, but certainly was going to happen anyway.
Yeah, absolutely. So considering this change, and as you say, the commercial explosion, the commercial to residential explosion, do you think that we're going to see an increase in sort of office space and ex-retail space being converted to residential as the world kind of embraces more of a hybrid approach to working patterns, for example?
Hi Jess, I'll pick up this one if that's okay. Hi to everyone at home. We were actually already seeing it. We're seeing the number of inquiries, cases and completions that we're seeing of commercial to residential is so much higher than it ever has been before. So I think the commercial to resi will definitely support the housing crisis, but there's other elements to it as well. I think at the beginning of the pandemic, everybody was like, oh, wow, I want to work at home all the time. It's amazing. I've got this great work-life balance. But I think it's all changed now. Certainly with seeing how successful all the industry events have been, everybody really wants to get out. A lot of people want to get back into the office, and you are seeing a lot more of it. I mean, Roma, you know, in specific, we're back at the office most of the time now, and loving it, loving the collaboration. So I don't think that what was necessarily thought at the beginning of the pandemic is necessarily the case. There's certainly going to be a lot of commercial to resi, but maybe not what we thought it would be. There are other focuses to help with this, though, the Brownfield sites, for example. So the budget today announced 1.8 billion of investment and development for those sorts of sites as well. So I think there's going to be a bit of a, you know, it's going to be part and parcel, but there's going to be a lot of development, a lot of commercial to resi conversions, and as Steve said earlier, with the high street, some of them are thriving, some of them are not, but the ones that are not, that's going to be the key areas. And you can see people looking around the high streets, looking for the opportunities, looking for what they can do with old warehouses, what they can do with shops, offices, those sorts of things. So definitely the way forward. We're seeing tons of it at the moment.
So you're seeing a big increase in this, but do you think that the high street and ex-office space is ultimately a solution to the UK's chronic housing issues, or are there issues in its own right? Some people certainly have been saying these properties don't necessarily lend themselves to residential space. Would you agree that
it depends on the property? So it's a case-by-case basis. So you've got, made large warehouses which can be converted into flats and apartment buildings. You just have to look at what's around them and the planning consents, etc. You've got other ones that are on the high street. You've got 3-story buildings that, yes, they can lend themselves to residential or perhaps mixed use. So yeah, it will help definitely, but it's not an end-to-end solution.
Mm.
So that's, unless you've got anything to add to that, Steve?
I think we see sort of lots of different opportunities within Roma Finance generally, and sort of I saw recently we did a church conversion into 3 apartments, and they were absolutely beautiful. You know, it's sort of, you wouldn't think I want to live in a church, because it's not something that I would think of in my head, but because they had to keep some of the old sort of wrought iron and sort of, you know, the glass, it was just beautiful. They'd done it really nicely, and it was so in keeping with this little village in Kent as it was. They were perfect. And again, we see lots of pubs that turn into, you know, apartments or houses, and we see sort of, you know, nursing homes that go into apartments, and they're actually very inexpensive to do, because you've got the bathrooms, you've got the apartments already split within. So it's how, I suppose, the very clever architects amongst us, it's how they see things, and the draftsmen that look at these things and think, actually, I can see this vision of this property. And, you know, people like me, I'm not very good at visualizing that kind of stuff, but when I actually go around and see the end product, it's great, you know. So yeah, I think there are a lot of opportunities. There are places because our town centres are changing, and you see a lot of semi-commercial, a lot of commercial next to resi now. It's becoming a norm, and I think, you know, the councils are generally doing more parks and more green areas as well with trees, so it's becoming a little bit more of an open space as well. So it's interesting to see what people can do with properties that you would think are just commercial properties, but you know, people are very experienced at this stuff now, and they can look at it and make that extra payments to architects and draftsmen and sort of see and visualize a really beautiful living area that, you know, certainly the younger generations are flocking to the towns and cities, so that it's working for them.
Yeah.
And we're also seeing, sorry, I was just going to say, I thought we've also, it's not just the sort of, you know, the houses and the flats. You're seeing a lot more HMOs now, and they're done to a really, really high standard. HMOs now, they're absolutely lovely. I mean, lots of pubs, lots of care homes, hotels. We're seeing tons of that now, and it's in areas that's needed. So that's also something that's really, really up and coming, and they're so much nicer than they used to be as well. So yeah, in addition.
Great. So looking again at some of those trends that you mentioned in your introduction, Steve, one of the big things that's happened over the pandemic is a bit of a shift in what we see as a stable retailer. You know, we saw big names, you know, people like Debenhams go very quickly, it felt almost overnight, during the pandemic. And it's seemingly from a layperson's point of view, quite a lot of smaller boutique shops and things like that, like, do quite well. How have you guys seen sort of face of retail changing through the pandemic, and how does this affecting kind of our understanding of what makes a stable commercial investment?
Yeah, it's a good question. I mean, we have seen that, but they were massive beasts. These people like Debenhams, they had massive overheads, and they weren't changing with the times. They were still doing what they were doing sort of 20, 30 years ago. Massive presence on the high street, lovely, but the costs involved in that with their overheads were huge. And as people changed to the internet, they were losing ground, and there was nothing they could really do. You know, they'd got the presence, that's great, but everybody knew who Debenhams were. You know, they didn't need to have a high street presence in every town. Everybody knew who they were, and it was just, I think you have to change with the times, and these are very changeable times. But the boutique shops is a huge success. You know, they are sort of, you know, new. They find a niche thing in a community, in a town, whether it's, you know, whether they're baking bread fresh, or whether it's a bookstore, or it's a coffee shop within that bookstore. They're using what they know, and they're generally local people that are in that local area, so they know what they need. And the overhead's much lower. It's generally family businesses, so that the wages are lower. And it really is, we're seeing that a lot. We're seeing a lot of sort of commercial units that are doing very well, that may have been once a store, that have been changed into sort of smaller, compartmentalized, sort of almost sort of market stalls almost within a retail unit, and they're doing very well. So I also think it's changing times, because COVID is sort of, a lot of people are at home, and they've changed sort of their view on society. They don't necessarily want to work. They want to work for themselves and try something creative that they did before. I think there's a lot of this going on now. There's a lot of new businesses being developed, a huge amount of new business coming out now in the last sort of 12 months. And I think it's quite exciting. But going back to your seeing what is a stable company, if you like, for us, a lot of our information is really based on the borrower. So it's sort of what the borrower is, what their experience is, what they've done before, what they want to do, what their 2, 3, 5-year plan is, and then sort of their overheads and looking at the finances slightly separately. But it's really getting a feel of that borrower and what they want to do. The only sort of issue that we have, that is a slight issue that you have to sort of talk through and get to comfort with for us as a bridging specialist lender, is the exit. So it's that exit is to go onto that commercial mortgage or that commercial term loan. It's finding those, because a lot of those did stop during COVID, you know, and actually they are coming back. So depending on sort of what that commerciality is, so what they're doing, if it's a store, it's a restaurant, it's looking at helping them get the exits in place as well, because that's hugely important for all the specialist markets.
And that fits with what Charlotte, you were saying earlier about it needing a kind of, each investment takes an individual approach and things will be fit depending on how the actual individual borrower is. It's quite interesting that rise in boutique shops and like you were saying about the idea of things being more tailored to the local area and local wants and needs. One of the things I've heard people say is that we're going to move towards a more European approach to city centres, with sort of bistros and, you know, a hybrid live, work, leisure kind of space. Is that what you see as the future? You know, do you see us going to that kind of slightly more hybrid approach?
Yeah, I think exactly that. I think it's exactly where sort of we're seeing the sort of growth markets. We're seeing sort of very cleverly positioned stores next to residential, next to bars, next to bistros, next to cafes. It's all working quite nicely, and they're making them a more enjoyable space. I mean, there's only so many coffee shops we can have in a high street at the moment. There's only so many stores we can have that sell the same thing. So I think we're making it, we're changing that thing. And I think it is a smaller world now. We're looking at what works in other places and thinking, actually, that can work here now. It's not, you know, it's not wall-to-wall rain and snow in Britain anymore. We do have our lovely summers. We can sit outside and enjoy drinks and meals and sort of, you know, it's a way of doing that. We go on holiday, or we used to go on holiday, hopefully shortly again, and you see that and you enjoy that. There's nothing better than going to the cinema, coming out, having a drink outside on a cafe and seeing the world go by, then having a meal. It's a nice environment. I think we want a part of that. Why should it just be for Spain and Italy and France? You know, we can do that here, and I think that's a big part of how the city centres and town centres will look moving forward.
And as Brits, we are also probably quite happy sitting outside on the pavement in the rain as well, you know?
Oh, there is that. There's umbrellas.
I think anyone's just happy to be out.
You get lovely heaters now, can't you?
Yes.
Yeah, it's you know, those pub umbrellas are a fantastic invention. All right, so moving from a sort of sense of where our physical high streets and everything are going and what our town centres are going to look like in the future, let's delve into more of the finance side, what this means for our market. So with all of the stuff that we've been discussing in mind, what would you say is the role of bridging specifically to work towards this new interesting future approach to our town and city centres?
I think the beauty of the specialist marketplace, the bridging and development lenders like ourselves, is that we can see and evolve our products to suit the changing world. So you can look at sort of a customer in a very different way, from customer A to customer B to customer C. They all want different needs, and we can actually see them and give them an independent view and talk them through a specific deal that suits their purpose, which would be completely different from customer B's or customer C's. And again, we can take the time out, sit down with them, discuss with them, and look at it in a far easier way, but very detailed way than the high street, which is still, you know, they don't like change. The high street banks are not liking the change, so they're going to take a little bit longer to understand the new world. Whereas part of the specialist lending is to be able to look at a customer individually and actually meet their needs. So we very much go for bespoke deals, bespoke products to suit a customer and what they're looking to do, because each customer will have a different approach. Some will buy a property that's closed and turn it into residential, HMO, for example, as Charlotte said. So that's a completely different need to somebody who's going to turn it into a semi-commercial, open a coffee shop on the ground floor and have 2 people in 2-bedroom apartments upstairs. So it's being able to be detailed and specific to a customer's needs, and that's the beauty of the specialist lender, because we can do that.
Effectively taking someone's end goal and working backwards.
Exactly that.
So, and tailoring it exactly to them. So If that means changing, moving somebody along a timeline, starting on a commercial bridge, for example, moving it to development, and then see them achieve their property goal at the end. It's very gratifying to do that, to watch the whole thing.
Yeah, and again, I suppose that individual approach comes in. Is that something that specialist lenders such as yourselves are able to do, perhaps more so than the high street mainstream lenders, is take that individual approach?
Yes, yeah, it's pretty much where we add the value, really. It's sort of, whereas you might have sort of a product with a high street lender that they've done for 20, 30 years, we constantly develop and evolve our products. And so we will sit down and we got a specific product for semi-commercial, we've got a specific product for commercial. We can then go from commercial developments, from ground up. We can do heavy refurb, light refurb. We can do a whole mix of things. We've got a product suite according to that. But again, we can then make a bespoke product just for that customer to make it fit into that customer's needs. So I think it's unusual. We're not the only people to do it, but it's a big strength of the small specialist market sector, all the bridging and developments. If you can have a wide offering of products, from development, refurb, purchase at auctions, residential, commercial, and then sort of move on to term loans as well, to sort of move into a sort of life product for the customer, or for that period of their life of what they want to achieve. It's really important to keep that customer and borrower for those years to see them achieve their aims. And then hopefully, if we've done a good job, they come back to us with their next, purchase or sort of development. So,
yeah. We've talked quite a lot about the kind of mixed use properties, semi-commercial, things like that, which I think we can all agree is going to become, or is already, quite a huge part of the changing face of our towns and high streets. So on a practical level, what are the challenges when it comes to these properties? Do lenders need to take a more nuanced approach to things like valuations and their risk appetites when it comes to something that's got mixed use? Talk us through what some of the pitfalls could be.
Okay, so yeah, and it is becoming more popular. Mixed use is certainly, probably, as we've already discussed, it's that future of the high street, but also of specific properties. So when you look at a valuation based on the commercial element as well as the residential element, and you see the rental income of the tenant downstairs who might be running a shop compared to the rental income of somebody who's living in the upstairs, it's important things to note are things like, does it have their own access point? So it's better if that residential has a separate doorway, so they don't have to go through the shop or the restaurant to get to their property. That's a value add. Parking spaces are a premium, especially in the town centres. That's a value add. So it's looking at the bigger picture. It's looking at the detail, really, and looking at sort of what you can achieve within that commercial element and sort of residential elements. And I think with all of these things, we are seeing a lot of HMOs, we are seeing a lot of semi-commercials, and you have to look at that valuation separately and look at it differently as you do from a standard resi bricks and mortar valuation. We look at it and you see what sort of values they have, what the tenancy values are, what the sort of retail values are, and you also look at percentages accordingly. For example, we look at 75% of residential for an LTV, but we'd look at 70% for semi-commercial, because you have that commercial element. So again, all funds are slightly different on that. So again, it's good to sort of speak to your broker and get that broker to understand each sort of funding sort of elements and what they look at. We class light refurb very differently from other funders, for example. So again, things like that, the knowledge of that broker to come to an independent funder like ourselves is really important. So the customer can be happy that he's got 2 or 3 choices, but to have standard choices that are all very different in their nuances. But it's really important because the broker's job is to get the customer the best fit for that funder. It might not always be price, it often is, but it might always be the amount of money they can get to do the works, and also how quick they can get that money. So there's a lot of things for them to know.
So what about that exit route question, obviously, which has come up as well in various points so far? Is that something that's a little bit more unclear at the moment as we're sort of emerging from this period of uncertainty? Because it's certainly something we were discussing during the height of the pandemic, was people in this market going, exit routes are a problem, we really just don't know what the future holds. Do we have more of a sense of stability around this now?
We do. There are more. I mean, again, the high streets are still a little bit unclear, but you have sort of the sort of up and coming banks, your Aldermoors, your Shawbrooks, your sort of, those kind of lenders that are a little bit more, understanding of where we are as a country at the moment and where we are economically. And so the exits are better. I suppose if you get into the minutiae, if you're buying a semi-commercial property or commercial property, be very careful of where it is location wise, because some funders have problems with exits where they're next to a pub or they're underneath a restaurant, or there are certain things within sight of their property. So again, it makes it more difficult. So it is very much sort of have a conversation with your broker or your funder about, if you're looking to buy this property and what you're going to do with it, get sort of that knowledge from sort of builders and architects first, before you just run hell for leather into something where it could be a problem to get an exit out of. To get the bridge, it's easy. It's certainly easier. To develop it is relatively easy as well, but we all need an exit. If you're doing short-term lending, we need to know that there's an exit there, or some obvious exit. And just be careful of buying over a pub, for example, with no sort of access routes that you have to go through the pub to get to your apartment. It's going to be difficult to sort of get those things sorted out.
One of the issues, sorry, Charlotte, you looked a bit like you were going to come in there for a second.
No, carry on.
Quite difficult on Zoom, obviously. So, on that note of exit routes, obviously, one of the issues that's faced a lot of development projects and refurb as well has been the ongoing supply chain cost of labour, all of these issues that have been facing the development market in particular. What does the market need to do to address these, if anything? What do brokers and their clients need to know about things like contingency planning? What do we need to know about this?
Well, I mean, this supply problem has been going on quite a long time now, in waves. It started at the beginning of the pandemic, but it was a case of you couldn't even get boots on site, valuers out, anything to move through the stages of the projects. The price hikes of steel, concrete, wood, anything like that, plaster, has continued to rise and rise and rise. It started to plateau now, thankfully. Chances are they won't go down, but at least materials are more readily available now. There's been less issues of actually getting hold of the materials. The prices are just higher. So we're now, as a business, we're now seeing more drawdowns taking place, which clearly means that work is speeding up again, pace is picking up again, which is fantastic, obviously. But I think when it comes to what brokers need to do, what clients need to do, they just really need to factor in a contingency plan, and as Steve alluded to earlier, check it out with architects, check it out with contractors, see what they expect, and make sure that that's factored into the exit route as well, allowing a bit more time to do things, and having a realistic look at your gross development value when you actually finish things off. So it's just being realistic and being very honest and open with the lender. The lenders can help if they know what's gonna what potentially might be a trip up for you or your clients. So that's the best thing you can do. Open and honest.
Yeah. Is that particularly the case, for example, with perhaps less experienced investors? Contingency planning is potentially going to be much easier for.
For somebody who is very experienced, they will have a better idea. They will be working with, either doing it themselves, or they'll have contractors that they've worked with for a long time. They'll get quotes in advance on exactly what to expect. We actually do work with first-time buyers, landlords, and developers. So provided we can see that this developer, even if they are first time, have an experienced team behind them, we will definitely consider the case. But having that experienced team behind them will allow them to understand that they need to have these contingency plans in, because they will be well advised of this. So we will check up on that, definitely, and it's better for the borrower that we do that.
Yeah, diverse expertise needed, I think sounds like a good.
Absolutely.
And that open and honesty thing is so important, isn't it, to communicate with all the parties involved. We don't need any more surprises after the year and a half or so that we've just had.
No, but you say that. You said that 6 months ago. We say that 6 months ago, and then, oh, look, it's happened again. So
Yeah.
There's always something new.
Yeah, maybe we're all getting much better at dealing with unexpected things on the horizon these days. Speaking of developments and changes through the pandemic, obviously the big one, or one of the big ones, has been the use of tech. And as you know, as we're used to, many people will be tuning in from their living rooms, as am I. Very used to a massive take up in tech across our lives, across all elements of our lives. Obviously, particularly in the property market, this has become really key to keeping us going throughout a difficult period. So, looking to the future, is tech going to continue to play a key role in property investing going forward? And what about specifically in the short-term market?
Yes, is the short answer. It's absolutely, yeah, well, I will elaborate now, but yeah, absolutely. And business continuity plans were essential. And if you didn't have one when the pandemic hit, you got one very, very quickly. We've used the likes of open banking, of Credus, of all sorts of different technologies to allow us to continue to lend through the pandemic. We've continued to harness it. We've made things much more streamlined, which has enabled us to grow to the levels that we have, which has been amazing. But it just makes things pay out faster. So, the likes of AVM technology, things like that. We've utilised so many different types of technology, but it allows for, an easier process with drawdowns. It allows for an easier process with, applications initially. Even the likes of Zoom has played a part, but it is going to continue. But it's been, with the technology side of things, it's more about making things slicker, smoother, creating a better overall customer experience. In the last couple of weeks, we've launched a new channel called Romaflow, which literally speeds up standard bridging cases to a very, very fast pace. We ask for a lot less in terms of documentation now, because we can actually do it ourselves with the technology that we've implemented. We've already built up significant business pipeline completions with this, and it's going really, really well. So we will just continue to do that to make it more smooth, much slicker, and keep improving the experience going forwards.
As you mentioned there, and obviously as you guys are demonstrating with Romaflow, this is so much of our use of tech over the past year and a half and in general has been about speeding and streamlining the process. What are the limitations to that? Is there a point at which, especially in this market, we really can't make everything automated? Do we have to take that in mind?
Yes, we do, of course. I mean, Romaflow it won't work for every case. It won't. There will be cases out there where you've got a really, really complicated development on a awkward piece of land, or there's difficulties with titles. Romaflow won't work for that, but because it needs more care, more attention. So we have the expert teams in here inside Roma to deal with those cases. We do aim to be as efficient as possible, but yes, in short, absolutely, there are structured teams in here and there are Romaflow teams in here. So we do the best thing for our brokers and our customers in every case.
And I suppose part of the picture is freeing up resources and time if you're not dealing with those simpler cases for as long. You've got more bandwidth to deal with the complex ones, I suppose, is part of the message.
Yeah, and some of our underwriters really do like getting under the skin of them. But that's good, because it just means that the customer gets the best possible structure and the best possible deal. So, yeah.
Which has got to be the driving point, isn't it? Drilling down into one area that has particularly been affected by this advancement of technology we've seen auction houses quite specifically be either welcomed or dragged kicking and screaming, depending on who you speak to, into the online 21st century environment. And suddenly, people have been able to attend these remotely, and this has potentially changed auction finance. Do you think that this is going to be a source of property purchasing that's going to become more important, more integral to the market moving forward? What's the future for auction finance?
I think so, yes. I mean, when you look at auction finance, we actually started doing auction finance. That's our first bridging, years and years ago. That's how we started it, to do fast bridging for auction purchases. They were obviously live events back then, and sort of, but even now we've seen that with technology. They've done video calls. These video calls now, where you can go around the house, or you go around the commercial property as you sit at home in your living room looking at it. We're seeing a massive uptake in online auctions, and I think part of that will continue. I know lots of people will like to go out and see them themselves, but I think lots of people will probably do that whole drive past the area physically, and then go on the auction sites online and actually look to be happy to actually look at the video going through it and purchase it that way. And I think that's something that will continue to stay now, even though with luck we won't be in a lockdown again. But I think that will, like a lot of the technology we've used during lockdown, parts of it will stay and improve our position and improve the situation moving forward. But I think auctions, we're seeing, after the 18 months where they were pretty much shut out, we're seeing a lot of auction purchases now again, and sort of developments from that and enhancements to those auction purchases. And most of them are online. So it's certainly something that will stay, I think.
Are there benefits for people who maybe haven't bought a property at auction before, whose clients haven't? Are there sort of benefits, pros and cons, pitfalls that they need to know about sort of this process?
Yeah, I think it's probably easy. If you've never been to an auction before, the online ones now give you all of that information on the same websites, so they can go through and really get to grips with how it works if they've never done it before, and talk through that, and also talk to their broker or talk to their funder about how it works at auction. Because again, you put your 10% deposit down, you will have 28 days to then complete the purchase. So auction houses were sort of built initially for bridging. Specialist lenders love auction houses because we have 28 days to complete. So sort of with a Romaflow case right away, very limited underwriting, very limited information from the client, and we can get to that 28 days very easily. So that's an ideal scenario. If they are unsure, probably an online auction probably safer for them because they get more information than a live one. So it's probably something that's worked well because of COVID.
Yeah, in addition to that, if somebody's never done it before and they're a bit afraid of it because it's, there is a time cap on it, it's 28 days. So you can actually speak to your broker, and your broker can go to a lender who, in advance, you can actually give them the property in advance, and you can get a lot of lenders do. You can get a ceiling price so that you know not to go above that, to make sure that you make a profit, or you have a good return. Which is another safety mechanism in there for borrowers who are looking to grow their portfolios.
So it could be quite an exciting area for a lot of investors to move into.
Definitely.
All right. So with all this in mind, obviously we've covered a lot of information so far in the discussion, a lot of different factors. There may well be people watching this who are relatively new to this kind of side of the market, and maybe taking their first steps as brokers into the commercial lending field. So what would you say to these people as the kind of first steps, main things they really need to know about this market? And in general, would you say that more education is needed across the board in other sort of the more mainstream markets, as this side of bridging becomes even more important?
I think people shouldn't be afraid of it. I think brokers who've done sort of mortgages or residential bridging in the past shouldn't be afraid of commercial bridging or developments or semi-commercial or any of that nature. It is slightly more detailed, but we can handhold, we can talk through how it works. And realistically, the more information, the better. So information on the borrower, which they'd have anyway from doing their traditional bridging, but also just get the address of the commercial property so that we can have a Google of it, we can have a look at it online, use that technology we're talking about to sort of see where it is, where the location is, how big it is, does it have access, get the use, the legal use that it has at the moment. Are they going to get planning? Have they got a change of use in place? All of these things are really important to get a feel of that case initially. And, you know, what do they want to do with that property? Do they want to change it? Do they want to change its use, or do they want to just enhance it and sort of make it into a semi-commercial, or make it into sort of, you know, a larger, instead of a bar, it's now a bar and restaurant, or, you know, with accommodation above. Find out what they really want to do. Give us the basic facts, give us the address of the property. We can do a lot online now. We can do a lot with technology to find out exactly what it has use for legally, where it is, pictures of it, you know, floor plans of it, everything that we can find out. So it really is, get the information that they would get for a normal resi property, and we can do a lot of the work for them to go, well, okay, this is what we're looking at. What do they want to do? You know, it's all about sort of, as you say, with any of these bridging and development deals, it's about what's the exit, what do they want to do, how much money do they need, and what have they done before experience the actual borrower. Once we've got that sort of ticked off, we can do a lot online, a lot with technology, and then come back to them and go, okay, this is what we found out. This is what we can do, and we can portray an agreement in principle straight for them to give them options, and then so they can discuss it with their client and see if that's something that is of interest. If the client wants to do something slightly different, again, I have no problem, neither do any of my BDMs in the field, for talking on a Zoom call like this with the actual investor and the broker. You know, there's lots of things we can do to get to what is a very individual sort of deal for that individual. So, but all I would say is don't be afraid of it. It's nothing, you know, if it's new to them, it's still a property, it's still a development, it's still, you know, sort of, just because it's commercial, it's no real difference. Get the address, get the details, and we can help them along with that deal, and see how the client wants to proceed. But again, don't be afraid to ask us to help. You know, if that's the case, we are here. The brokers and us have good relationships, so it's in everybody's benefit, the borrower, the broker, and ours, to get that deal sorted out. So we're quite happy to spend the time and knowledge and experience to get that deal sorted.
Fantastic. Is there anything either of you would like to add in general to the discussion that we've had before we move on to some questions from our audience?
No, I think we've probably covered a lot. I think it's a massive market, and I think, you know, if brokers aren't involved at all with commercial, semi-commercial at the moment, they should probably get involved, because a large part of our growth at the moment is in the commercial and semi-commercial markets. So there's lots of business out there to be had. So there's no need to really pass that off to other brokers or to networks or to others unless they really want to. You know, they can have a go themselves and talk to us about a commercial deal.
Some great opportunities for potentially building a business there. All right, well, thank you guys so much. I'm going to move on to some audience questions now. So first things first, and this is something that we've touched on quite a lot, very pertinent question at the moment, as we discussed, exit routes. So Sarah asks, what do you need to provide, what information do you need people to provide exit-wise on your bridges? Sorry, my ability to read has gone out the window.
Okay.
If someone is buying to develop into a new type of property, such as a coffee shop with residential above, so mixed-use property, as we've been discussing, how can they provide an exit strategy on this for a business that, for example, is not yet having any accounts? So, you know, it's all well and good potentially saying that you need lots of information, but, you know, how do you get that information if it doesn't exist yet?
Yeah, that's fine. No, I get that. And basically it's us knowing the marketplace as well. So if somebody is making a coffee shop with an apartment above, and as long as it's not next to some chemical factory or a petrol pump or whatever, we know there are many, many exits for that within the marketplace. So unless they're sort of wanting 90% or anything, you know, specific, for a general 65, 70%, you've got already, I can think of 7 or 8 exits off the top of my head. So in that scenario, I don't need specifics, because it could be that they're having a bridge for 12 months and things change in 12 months anyway. But as long as I know what they're doing, and I know there are marketplaces out there, more than one specific, I'm comfortable with that as an exit. And again, to be fair, the exits, you never know what happens in 12 months. So if I know there are 3 or 4 exits right now before I give them the bridge, that's absolutely perfect, perfectly adequate. And then even at that case, the exit could be that they sell it anyway. And as long as the LTV is reasonable and we see the GDV is reasonable, that's always the backstop. It's not maybe what the borrower wants or what we want, but it's, if we know that that is last resort, they could sell it and everybody gets their money back, that's absolutely fine as well. So really, it's, we don't need specific letters for exits from funders or anything. We don't need anything like that, because in 12 months it's not worth it anyway. But it's to know that there's nothing there that would stop that getting an exit at the current levels of that we're playing at. So at the moment, if it was a coffee shop with an apartment on a nice street in a nice area, there are more than 20 exits I can think of right now with other funders. So that would be no issue at all.
It's less about having a specific piece of paper saying this is how we're going to use it.
Yeah, that has gone.
Knowing it's there.
Yeah, I need to know it's there. And it's sort of, if it's a very specific deal, there might not be as many exits for it. So then it's more, okay, if it's a simple deal and we know that there's a commercial element of 60% or something, there's lots and lots of exits. It's very unimportant for us. If it is a very specific, you know, type of commercial building, you know, if it's a certain height made of a certain, you know, non-standard material, the exits become less and less and less. So it's really just getting to grips with, if it's something unique, there's an exit there. And it might be then we go, okay, so the exit for this, I can't see that we'd get an exit easily. Mr. Broker or Mrs. Broker, where is that exit coming from? And it might be, okay, we've got this, have a look at this funder, they're new on the market, but they do specifically timber framed properties, you know, and it's like, oh, okay, yeah, fair enough. I get that. So.
Great, thank you. I hope that answers the question. I hope I asked it correctly, Sarah, that seeing as I've somehow managed to garble it somewhat. Our next question is going back to a topic that came up quite a bit earlier on and particularly came out in the budget today, as you mentioned, Charlotte. So what are some of the issues surrounding brownfield sites? You know, if we're going to have a big investment in these going forwards, what do borrowers or intermediaries need to know about this kind of project?
I think you just need to know if there's any restrictions on the site, really. So if there's any landfill there, if there's any hazardous waste, what the clearance costs are going to be. Just try and request those costings on clearances as much and add it to your contingency. But you know, there's the added benefit that they'll probably be cheaper anyway. So just look out for any trips and pitfalls, anything like that. So yeah.
So as you mentioned, they'll probably be cheaper. Is it then about balancing that kind of positive?
Yeah, exactly. You've got the positivity, so you'll, you know, if it's not known, then you can negotiate down. If it is known, then the price will likely be cheaper anyway. So hopefully it will level off. But again, be very upfront with the lender about it, and that is your way forward, basically.
We seem to have potentially lost Steve.
I've just noticed.
I think we possibly have tech issues, internet issues. We'll see if he comes back in. In the meantime, this is, I think, possibly our final question. If you'd like to ping it over to Steve, we'll just have to see what happens. But Charlotte,
Yeah.
it goes back to, and we did sort of look at this in a bit of detail earlier, but it goes back to the issue of supply chains and, you know, those kind of issues around development. So this person asks, where larger institutions are able to mitigate risk or have a financial buffer in case things go wrong, does this mean that smaller house builders with tighter margins are becoming higher risk prospects for lenders? Are lenders less likely to want to lend to SMEs?
No, not necessarily. No, I definitely don't think so. You know, the smaller house builder, excuse me, they may be really, really experienced and have the key contacts. I mean, as I alluded to earlier, we lend to first-time developers. So as long as they've got an experienced team behind them, you know, that's absolutely fine as well. Everybody's got to start somewhere. And it's not necessarily high risk. It's looking at it from an individual perspective. It's looking at understanding the deal. It's looking at understanding the costs. So from a lender like Roma, we look at every deal individually anyway. So whether it's a flow deal or whether it's a structured case, we will consider everything individually. So it's just finding the right lender for you. That's all.
Steve, sorry, we lost you for a minute there.
Yeah, talking of technology, I just had a power cut in my house.
Yeah. Were you just trying to leave me to deal with the questions?
Yeah. I don't know if it's a very difficult question, but it was a very, very awkward power cut to read that much. At least it came straight back on again. I was a little bit concerned. It was like my alarm was going off, all the lights went off. It's like, oh, okay.
Oh, wow, that's very dramatic. Well, as the last year and a half has taught us,
yeah,
totally unexpected.
Just carry on, smile and just carry on through it. It's fine.
Keep on, carry on in the great British way. All right, so that's all of our audience questions. Thank you so much for sending those through, guys. So finally, before I let you guys go, you know, is there anything you wanted to add about the future of the high street in a more general sense? Is something we've covered already, but, you know, just in case, is there a final message you want to leave people with about where we're going?
I think it's a really positive message. I think people need to take that. We've had Brexit, we've had COVID, we've had lockdowns. It is changing, and people shouldn't fear change. It's opportunity. And I think there's a lot. We are doing more developments and bridges in general right now than ever before, even before COVID. So there is business out there to be had. You know, there is a lot of business specifically in this semi-commercial and commercial sector. And I think with the change in face of our town centres and city centres across the country, there's going to be more and more opportunities for brokers to look into that commercial and development sector. And if they're not doing it, dip their toe in, because there's a lot to be done there. It's a huge market now for, you know, it's billions and billions, you know, annually, but, you know, hundreds of millions are spent weekly at the moment in that sector. So with you know, Mr. Sunak put in 1.8 billion into the brownfield sector on its own. We're looking at brownfield sites now being very attractive again. You know, I'll have to go through all the sort of what he said. I haven't looked at his speech yet. I'm sure I'll have a look at that later and see what the sort of terms and conditions are that are under that in small writing. But it sounds a massive amount of money. And if he's doing that to instigate growth and impetus in those town centres, that's a very good thing. So, you know, I think it is a positive message. There's a lot of money being made. There's a lot of change in faces to our town centres, but it's a positive thing. It's better than seeing them just curl up into closed shops, which is the alternative realistically, and everybody's sitting on the computer ordering from Amazon. So it's nice that we're changing the face of our town centres, and hey, if we can become a little bit more bistro, like a Spanish cafe, I'm all for that. That's fine.
Absolutely. All right, well, it's been great to chat to you guys. Sounds like the message is positive trajectory, tech is great, and communicate and get experience from lots of different people, which all sounds very positive. I look forward to cafe culture really coming to the British High Street. I will personally be sitting out there with my umbrella.
Yeah,
me too. I'll see you there.
All right, well, all that remains is for me to thank you both massively for coming and speaking with us today, giving us this overview, and thanks to our audience as well for listening in and for your questions. And yeah, I hope you all have a great day, and we all get a chance to enjoy going out to these lovely bistros on the high street soon.
Thank you, Jessica.
Thanks very much, Jessica.
Cheers now. Bye-bye.
Bye-bye.